And now I want to give you a quick overview of what this whole foreclosure gate is all about. It's really about three things. One is how these loans were originated. Did they meet lender standards when they were packaged and resold? And there has been documentation that in 2007 and 2006, up to 80% of these loans did not meet qualifications to be packaged and sold as AAA loans. So that creates a legal liability for these lenders to buy back the loans. Then the second part in this process was how these loans were packaged and traded. Usually when you sell a trust deed, which is securing the mortgage, you have to file a notice with the county saying that the trust deed has been transferred and the ownership has been changed. This, incurs a fee of about $100. And because these people on Wall Street wanted to trade these loans frequently, they wanted to avoid this fee, so they set up a system, an electronic system to trade these loans called MERS. And MERS took possession of the trust deeds and basically assigned beneficial interest of these loans to whoever was the current homeowner, the current investor. And what we're finding out is technically this process was not quite legal, meaning that these loans are not really supposed to be secured by the real estate that supposedly these lenders are claiming that they're securitized by. Now the third problem is the whole process of foreclosing upon these loans. This is where this whole robo-signing process came in, where people were just blankly signing forms, filling out blank forms, making sure everything looked correct after the fact, and really not giving the fair review of the foreclosure file that they were required to do by law. So basically they were foreclosing at will, changing things to fit their situation and their needs, and not really following the letter of the law, giving the homeowner his full fair shake to bring his loan current or modify his loan. And those are the three things really going on with foreclosure gate, and that's what's happening today. So just to review, the three problems are how these loans were originated, and did they qualify to be AAA rated conforming loans that met investor guidelines to be repackaged and sold. The manner in how these loans were traded, meaning that they were not, each time it was traded, they were not recording the sale of the note at the county where the property was located. And the third part is they did not fill out the paperwork properly and go through the correct foreclosure process and procedure with the appropriate review to foreclose on a property. And those are the three main things going wrong in the foreclosure gate process. And one of the things that's going to have the most impact in the future is how these loans were securitized and sold, because these investors that bought these loans have deep pockets and are able to contest these banks in the court of law to protect their interest and to protect their losses, because these investors are the ones actually losing the money, where these banks are actually like middlemen and charging service fees for what they're doing. And they're going to require these banks buy back a lot of these loans and take the losses upon themselves because they did not meet the guidelines that they were sold under originally. So that's basically fraud. So that creates a real liability and also an incentive for the lender in the future to work harder to keep more people in their home.